The company itself is known as excuse me, is known as Investments Alliance Limited. Investments Alliance Limited currently has got 13 members. And we started sometime in 1998. And the idea then was to meet as a group. We were young, in the 30s, and we used to call ourselves young professionals. So what triggered it all was obviously the Second Republic for Malawi. We wanted to hear from the politicians and the prominent people in Malawi in terms of what they thought about the democracy that had been voted in, and then to find out exactly what strategies they had to develop the country. So we used to have, it was lunches. We used to have lunch at the Mount Sochi. You will recall that in Mount Sochi there was a nice restaurant at on the 5th floor. So we would invite people that were very prominent in business as well as in politics. I'm going to give examples of people like John Tembo came to talk to us. We had Justice Malewes who invited us to his residence when he was the vice president. We had late Bingu before he was president. There were so many people who came to talk to us. I can also recall late Chikaonda came to talk to us. Basically, they were talking to us in terms of what they thought about the country and how it was going to develop, because we were interested as young professionals. After about a year, we decided to say just having lunch was not the right thing to do, and we agreed that we would want to start investing. So we came up with a name for the company, and we called it Investments Alliance Limited. We were contributing. At first, we started by contributing a fixed amount of about 10,000. And you should know that in 1998, 10,000 was a lot of money. So we were contributing 10,000. We were 18 of us. And from 1998 to about 2001, the fund had grown from 0 to approximately about 11 million kwacha. But we thought that we were not growing at the pace we wanted to grow. So a paper was prepared, and we called it Repositioning Strategy. That strategy in itself was trying to look at what we had done in the past 3 years, and also we were trying to say, where do we want to be? So what we did generally was to say that those that were not committed should probably think of exiting from the group, and those that were committed could continue with the group. So out of the 18, 6 decided to exit, and we were left with the 12. We were contributing 10,000 prior to 2001, but then we realized through the strategy paper that contributing an equal sum was not the right way, because we were not equals. So what we did was to look at an equitable way of contributing, and at the same time valuing the shares on a year-by-year basis. So we opened up and asked anybody to contribute as much as they wanted. So basically, this is where it started. We are now approximately, if you look from 1998 to now, we are about 22 years. We are 22 years old, and the fund has really grown from 11 million 2001 to approximately 4.7 billion as at December last year. I think obviously, first of all, is to have a structure, a legal structure, in which you can fund, you put your funds into. So we had a legal structure, and in our case, we decided to go for a limited company, and that's why we call it Investments Alliance Limited. So we formed a company. Then we had directors. Among ourselves, we appointed some people as directors. We had 2 people who were really, in a way, managing the day-to-day affairs. They are not day-to-day affairs because we don't have employees for this fund. So there were two of us who, at that point in time, volunteered to work and ensure that we manage the fund. So there was Mr. Vizenge Kumwenda, who is currently the Group Chief Executive Officer of NICO Holdings, and myself. So the two of us were the ones who would negotiate with the different companies that we were interested to invest in. We were also the ones talking to companies that could do, individuals or companies that could do prepare accounts for us, and we would also negotiate with the bankers and the different institutions that would assist us in terms of growing the fund. I think, as I've already said, what was very critical to all of us was to ensure that we have a structure, and also we agreed in terms of how we are going to operate. So the board would meet on a quarterly basis. Accounts were being produced on a monthly basis, and we ensured that we had the accounts audited, and from inception, Deloitte have been our auditors. Yes, very expensive exercise, but I think it's very good, because if there are many of you in a group, you want to ensure that whatever figures, whatever information you are getting is the right information, and it has been audited. So those were some of the steps we took, but we also ensured that we had an entry criteria. So basically what we said is, if there was anybody who wanted to join us, all of us would have to agree that he should join us. And if one did not agree with somebody joining us, then that particular person had to give reasons. And if the reasons were valid, then the person would not be accepted as a member. So we started, as I said, 18. We ended up with 12. And out of the 12, some exited. And then later on, some people who were working, Malawians working for African Development Bank, there was George Honde, Noel Kulemega, and late Victor Ndisale joined us as Investments Alliance Limited. I think, as all of us are aware, in a group there is diversity, whether it's diversity in terms of the qualifications of the people, ideas, and even the way to do things. So first of all is to ensure that you have a good structure, and also you have some guidelines in terms of what you can do and what you cannot do. So in terms of the issues is that you don't expect that the 12 or 13 people would have similar ideas. So there will be differences. And I think what we did in our group is to ensure that we welcome differences. And then we analyzed why we had differences, and then look at a common ground on which we could move forward. The other thing is, when you are investing, because we have invested in both listed and unlisted equities, you obviously burn your fingers. There is no way you can have all equities doing very well. So there have been some instances whereby we have invested in institutions that are not really doing very well. I think there is one equity where we invested in about 15 years ago, and up to now we haven't received any dividend at all. So you should expect such issues when you are investing, because if you don't burn your fingers when you are investing, probably you are not investing very well. But what is critical is that the gains should be more than the losses. So basically, yes, we've burned our fingers in some equities. And even when you go back, some of the listed companies, they've gone up, the share price has gone up and gone down. I think TNM is a very good example. It started, I think, probably at 2 kwacha. It went to about 6 kwacha and went back to 1 kwacha something. and now so it's hovering about 25. So that's the way you should be looking at investments. Don't think that every time will be Christmas Day. There will be some days which are not as good. I think to us as a group, Christmas days started probably about 3 years ago when we started paying dividends, because for all these years what we were doing was to retain our investments, our income, the net income that we are getting, reinvest into the company. But starting from 3 years ago, we've been paying dividends. And the last year, which was 2019, we paid a dividend of about 85 million kwacha. So that to us was our Christmas, and it's been Christmas for the past 3 years. And we are hoping that since now we've retired, every day will be a Christmas day.
My name is Enoch Franklin Nkumba. I am 28 years old, a Blantyre resident, and I recently got married this year. I am full-time employed. I work for a company called Open Connect Limited. And I am also a keen investor. I am part of a group and a co-founder of this group called First Street Fund, which is a grouping of young professionals, and was founded in 2017, December. Well, I think the genesis of this idea, I could start from the foundations that it was mainly from my peers and ex-classmates from college that we sat down, and I think it was mainly discussion from an arrangement that we would see that from the people that were participating in many village banks, I would say. Now, when you look at the structure of such groupings like village banks, you can see that there are some who we would describe as maybe net lenders, and then there are some who would describe in the village bank mix as net borrowers. Now, it was mainly weaning out those group of friends and associates that I perceived to be as the net lenders. And then we sat down and said that I think we could do more beyond just this investment tenure of a year, which most village banks work. We say that maybe we could try to look at this in maybe in a longer term, and then we could achieve more. So we sat down. I think we started as an arrangement of 15 of us. And then we said that, okay, how can we invest? We could target what are the type of investments that we could look at for a long period of time. At first, we're targeting, what if we targeted, say, 10 years? That's how we started. Now, we said that maybe for a 10-year arrangement, we could aim for the capital markets and the money markets. But at that time, we did recognize that we may not have had the skills and the information to fully do it on ourselves. Now we said it was wise. We thought that it was wise for us to perhaps involve an asset manager. So we started investing in, that was December. The first investment was in December 2017 through an asset manager who was spreading our investment into money markets and capital markets. I would say that first of all, the unifying factor was number one, what I would say, that we all subscribe to the notion of deferred gratification, where it's that we want to do more and we would actually want to grow this generation worth beyond what we can actually consume right now. And we would want, we actually just want to I think invest and see that we've achieved something, that sense of achievement in the long term. So I think that was that unifying factor. And also through the years, I've seen that something else that has actually helped us quite a lot is the level of discipline that we've actually seen through the group, that month in, month out, people can actually part with their disposable income, not into maybe some other, maybe clothes or something else, but they would actually want to subscribe to this in shares of this type of a group. So I think that's just that unifying bond. And well, I can't also take away the fact that we've actually also become friends, and this has helped quite a lot. Well, I would say, first of all, yes, they are the lows and the highs. As I've said, it's just that whole notion of deferred gratification, which sounds easy to the ears, but then for you to actually put it into practice, it's quite painful. For you to actually see that, well, I could have done that, but I choose not to. I would rather invest this money and buy these shares which are now available. I would rather buy bonds which are now available. It's quite painful, and it's not an easy process. But beyond that, even this money that you put into these investments, it's just that whole idea of you to fully manage the expectations, just because we are a group of mainly young professionals, and most of us have got expectations. We want to see this money grow, and we want to see it grow fast. So it's just that whole idea of having to manage these expectations, where we see that, well, for the past 6 months, maybe this fund has only grown the interest by 5%. And we often get questions, is this really the best that we could do? I could have done better. And also this whole idea of managing those expectations, and also taking into account that some of the investments that we've actually done have actually given us a negative return on them. We've actually lost some money in the investments, but then at the end of the day, on aggregate, we still see that the growth, the level of growth in the others are actually more, so they upset what we lose out. So it's just that whole idea that I actually see. And in addition to this, we've also had lost some members through this journey, which is also something else that we do not want to see. We want to see us through until the end, but unfortunately that doesn't happen. Despite us being a small group, but then, well, we still end up losing some members. We started in the first month that we invested, that's in 2017 December, we invested a total of 750,000 as a pooled fund. But now we're looking at figures 47.5 million kwacha. And we're, all things being equal, we're quite hopeful that we could close this year at around 60 million. And I think in the long run, we are, yes, of course, targeting the billions. As I mentioned, we started with 750,000, and we've made some progress. Right now, we're looking at 47.5 million kwacha. So you can actually see that journey. So what I would say to others is that this is possible. You can actually aim for the stars, and there's so much more that you can actually do. There's so many investment opportunities that you can look at. So you can give it a try. All it takes is just to sit down, discipline, and focus, put in the money. Yeah, so in our journey, I think with where we are right now, we're at that stage where I think we want to break away from that infancy. And one thing that I could say, that where we started, maybe our arrangement might have not been the most appropriate for further growth. Like I said, that we've been investing mainly in capital markets and money markets, but then we want to diversify our scope, where we can start looking at real estate and some other investments. Now this has brought in the necessity for us to properly register, and we've actually sought a lot of advice from our asset managers and as well as other investors that have done it. And one of them is Mr. Simon Itai here, who's actually he's been quite a pillar and he's helped us quite a lot. And I do see that there's a lot that we can actually learn from. The blueprint is already there. And I think there's no need for us to look elsewhere than just to benchmark what has been done and all for this journey. We actually do hope to one day actually own a part of these significant shares, you'd say, to one of these financial institutions that we see on the Malawi market, and even maybe develop our own. That's actually the big dream that we have. With where we are in our journey, as I already mentioned that we started as a grouping, Wind from the Village Banks. Now what we want to do is that we want to have a more structured approach, just because we do note that once we are more structured, I think we can diversify some more. Like I mentioned that at the moment we're only investing in capital markets and money markets, but then we want to diversify and widen our scope, where we can now start to look at other investment channels such as real estate, among others. And while doing this, we want to register as a limited company, and our asset manager at the moment, who's NICO Assets, has been quite helpful, and they've taken us through such type of an arrangement. We've also sought a lot of advice from other investors who've done it, and one of them is Mr. Simon Itai here, who's he's been quite a pillar and for our group, and he's guided us on a number of aspects, and he's been helpful in this whole idea of how we can actually register, how we can actually look at the share distribution, how we can subscribe, and it's quite a number of things that you can actually learn from. And another thing that I would also just mention over here is that, well, the blueprint is already laid out, and I think other young aspiring investors can also model this, and they can benchmark those that have done it and have achieved before them.
I think what I would say is that most of the people, I make presentations on the investments, and I also give examples of Investments Alliance Limited. And I think what is critical probably is to start with the end and say that most of the people that I make these presentations to, there are exceptions. Sometimes I talk to people who are already retired, but I normally talk to people who are very young, like Enoch, that will be coming to talk about investments. I have always said, start from the end and say, if you were to retire, what you want to do? What is it really that you want to do? And most of us probably would want to enjoy the life that we are enjoying when we are 30. So if that is the starting point, then I say to them, how much do you have to invest now to ensure that you enjoy the life that you are currently enjoying, going to Blue Elephant and the different places? So I have always said, please invest between 10 to 25% of your gross salary every month without exception. Because the idea is to postpone the enjoyment of today for the gains at retirement. So if you invest religiously between 10 to 25% of your gross salary, I'm not talking about net salary here, I'm talking about the gross salary, then your IRR, the IRR here is income replacement ratio, will be higher than probably most Malawians, because they say in Malawi, the income replacement ratio, which is an income that you earn compared to your salary. So assuming you are earning 1 million kwacha a month, the IRR is expected to be between 70 to 90% for you to enjoy similar life to the life that you were enjoying before you retired. So you need to ensure that you have got between 70 to 80% of your income. So the only way you can ensure that you have that IRR is to invest the percentages I've spoken about. So I've always said to them, do that and start early. The earlier you start, the better. Because I have some graphs that I show, and this can be done using Excel. It will show you that if you start while you are young, then by the time you are 60 or 70, which is the retirement age in Malawi, then you have adequate, one, investments, because by investing that, you are investing in different areas. And this is what I say, you should invest in three sectors. Obviously, property is one of them, the money market, and the equity. So ensure that you've got a diversified portfolio as you grow older. So don't only depend on the equity, whether it's the stock market or private equity. Go into the money market as well, and also obviously have some properties or a property. And again, when you look at the sources of income, we've said basically there are about 7 sources of income. By the time you retire, have at least 5. And when we talk about those 7 sources of income, we are talking of things like dividends, rentals, salary, for those that can innovate, royalties, we can go on and on. So have at least 5 sources of income, so that by the time you retire, you have got more than one property. You can sell that property and have a gain on the property itself. That's also a source of income. Similarly, if you've got shares while you were young, you acquired some shares, you can sell and have a gain, or you can retain those shares and have a dividend. And all those are sources of income. So basically, that's what my advice is. And I've also said you should look at forming groups. It's nice to do it alone, but you move faster if you are in a group, because then what you are doing is you are pulling resources from different people with presumably the same goals and objectives. So that's what I would say is my advice to the young ones.